Time for the business news now with Kate Moody. Good evening, Kate.
Hi, Delano.
You know, it's been a rough day over in London. Theresa May has been on a real roller coaster, and this obviously had an impact on the markets.
Absolutely. And the biggest impact, of course, was on pound sterling. That's where we saw the most immediate reaction after the Brexit vote back in 2016. And the British currency has now dropped fairly steadily ever since. Now, if you look at a graph of the past 24 hours or so, you can almost track the political developments. You see it was up and fairly steady after Theresa May announced last night that her cabinet had backed that draft deal, then plummeting there as Brexit Secretary Dominic Raab kicked off that string of ministerial resignations. That is its biggest one-day loss of 2018. Pound on track for its worst showing since the referendum, down about 1.6 against the dollar, a bit more against the euro. Now, the major European stock markets had closed before British Prime Minister's latest comments. They did close mostly down, with the exception of the FTSE 100. Typically, weak sterling is good for UK exporters, although the uncertainty has weighed on banks and financial stocks in London. RBS shares tanked nearly 10% in the lender's worst day since that referendum in 2016. It's a different picture on Wall Street. US investors don't seem too impacted by the Brexit developments, at least for now. They were boosted by some trade news, which we'll get to in just a minute. The Nasdaq rising about 1.4% as Apple seeks to snap its losing streak. Now, earlier I spoke to Ranko Berich, head of market analysis at Monex Europe, about the British currency's volatility. Take a listen.
I think the fact it's the biggest fall we've seen this year about fits with the news flow of the last 24, 48 hours. What have we actually learned? We've learned that May has barely, in the most formal and technical sense, held her cabinet together behind a deal. The most important question, which is whether or not she will face an internal Tory party rebellion before she actually gets a deal to Parliament, remains completely open. We've seen numerous reports, even in the last few hours, of letters flying to the 1922 committee, which of course triggers internal Conservative Party leadership challenges. How credible these reports are, again, we have no idea. The sterling reaction has been probably proportionate to the negative news we've seen over the last 48 hours. However, what I would point out is that unequivocally, if the leadership challenge is launched, we will see further sterling downside down to the 125 area against the dollar and possibly below.
For investors' point of view, what is the best and perhaps worst case scenario here going forward?
So I think at this point, before we talk about the best case scenario, we've got to talk about a good scenario. A good scenario at this point is quite simply a no-deal Brexit being ruled out. That's it. It doesn't have to be, a comprehensive, expansive trading relationship. We're talking, the Canada deal plus. The bare minimum at this point will be sufficient, in our view, for a substantial sterling rally. The best case, obviously, and this may be a subjective opinion, based off economic studies of what the best thing is for the UK economy. The best case scenario, of course, is not leaving the EU at all. But at this point, for all intents and purposes, simply getting a deal through Parliament is, a realistic best case scenario.
Ranko Berich speaking to us earlier. Now, the future of the UK economy will depend largely on what kind of a Brexit deal is eventually reached with Brussels. But just what's happened since the vote took place, Yenna Lee has been finding out.
One of the most immediate and concrete measures of the Brexit effect is the British currency. The pound sterling plunged in the immediate aftermath of the referendum and hasn't recovered since. That impacts purchasing power because it means that imported goods cost more for British consumers, which drives up inflation. While GDP grew at a stronger than expected 0.6% in the last quarter, it's still dragging behind other major economies. And according to analysts, Brexit has already cost anything between 1 and 2% of GDP since the vote. That's around 20 to 40 billion pounds a year. The uncertainty over what comes next is weighing on business decisions too, with firms holding back on investment. Currently, investment only stands at 2% higher than at the time of the referendum. Before the vote, the Bank of England had forecast a 13% increase between 2016 and 2018. Unemployment, however, has dropped to its lowest level since the 1970s at just 4%. And while there may be more and more job vacancies, some of it is due to the number of foreign workers who have since left the UK. Some businesses warn that it will be hard to fill the positions with qualified candidates. The British Chamber of Commerce warning that there will be a deep-rooted skills gap if a new migration system isn't put into place.
Shifting away from Brexit now, the world's two largest economies appear to be inching closer to a truce in their trade war. The US and China have this week confirmed they've resumed talks over their tit-for-tat tariffs, and the next round of measures has reportedly been put on hold. That's according to the Financial Times, which says that trade negotiator Robert Lighthizer has told US industry executives that the Trump administration is waiting to see how those talks go. The US has issued a list of demands for trade reforms and is threatening still more tariffs on almost all remaining Chinese imports if it's not satisfied. Donald Trump and Xi Jinping are expected to discuss the subject on the sidelines of the G20 summit at the end of this month. Let's check on some of the day's other business headlines now. Walmart has raised its full-year earnings forecast as it reported strong sales for the last quarter. The world's largest retailer has been investing in its online presence to better compete with Amazon. It's counting on e-commerce as it heads into the holiday shopping season. French Finance Minister Bruno Le Maire has urged the European Union to take a stand against Donald Trump and agree a unified policy to increase taxes on tech giants. A French-led effort to pass a 3% tax on digital revenues failed to win approval as tech hubs like Ireland and Denmark fear retaliation. But Le Maire told CNBC that member states should overcome their differences and catch up with modern economic challenges. And Facebook says it has made progress in its efforts to crack down on hate speech and other controversial content in its second such report on the subject. Also on Thursday, the social network said it had cut ties with a consulting firm after a New York Times report that the Definer's public affairs company had pushed a smear campaign against liberal donors like billionaire George Soros. Seemingly no end in sight to the string of scandals that seem to be dogging Facebook.
I read that article on my way to work. It was really shocking, especially how both the leadership, the Sheryl Sandberg as well as the CEO handled
Mark Zuckerberg.
Mark Zuckerberg. I lost his name there for a second. Handled the whole scandal. Thank you very much for that, Kate Moody there with the day's business news.